Welcome back. Now, second quarter GDP growth has largely beat analyst expectations, coming in at 0.8% opposed to 0.6%. This comes after a sluggish start just above the flatline 0.1% growth in the first quarter. The second quarter gains were largely driven by a rebound in mining and manufacturing. Maarten Ackerman, chief economist at Citadel, joins us with his analysis of the print. Thank you so much for your time, Maarten. It was actually quite interesting to see all the forecasts, because I feel like there was a wide range. I even saw 4% coming in, 0.8% at some point as well. So I'm just wondering, in terms of where it landed, how far was it from your own expectations? And really, what can we take from it in terms of growth from that 0.1% that we saw in the first quarter to now?
Yes, I think, that wide range that you're talking about speaks to the uncertainty that we face. There's so many things happening in the world at the moment that you're not really sure what the impact might be. If you think about the trade tariffs, exports, and logistical issues that we are dealing with. So there's a mixed bag of things that one needs to consider. So the number that printed 0.8 was actually very close to the average expectation. So that wasn't really a big surprise. That's now for the quarter. And I think it's a healthy recovery. We'll unpack it now a little bit more, but from almost no growth in the first quarter. Unfortunately, if you look at the growth over the last year, that's still sitting at about 0.6, which is about 1% less than the growth in our population. And that remains a concern. As long as we grow less than the population, in my mind, I call it a per capita recession. So we're adding more people to the economy than goods and services. And that is not going to help us in terms of addressing the real issues, which is unemployment, social conditions, and the likes. So we still need to do a lot of hard work in terms of policy reform to actually get to more sustainable growth, where we actually grow faster than the population. And we're not there yet, unfortunately, at this point.
Well, just talk to me then about the growth dynamics, because I am quite surprised that manufacturing had such a big contribution, considering also, we talk about that second quarter and, of course, the tariff story, and we know the impact of that on manufacturing. And quite surprisingly, because agriculture was the star performer in the first quarter, I thought maybe it would show up a little bit here, but not too much. But also we know that also is feeling the impact of tariffs. So just talk to me about the growth dynamics that we saw in the second quarter.
Yeah, I think, in the first quarter, we actually warned that this economy can't just keep growing on the back of agriculture. Agriculture is a very resilient and fast-growing sector. It had two double-digit growth numbers the previous two quarters. So you can't expect that will continue, indefinitely. Fortunately, another positive contribution, up about 2.5%, which still talks to quite a lot of resilience in that sector. And as a result of that, agriculture has been moving from the smallest sector in the economy to now the fourth largest, the fourth smallest, if I can put it that way. So it's now 5% of GDP, just slightly behind mining, which is about 6% of GDP. So agriculture is growing in importance. But you're 100% right. I think the encouraging sign was what I call growth engine. So for the last number of quarters, mining, manufacturing, and you can add to that construction, printed negative numbers, red numbers. And we know that that's the sectors that really face a lot of the structural issues, from electricity supply to logistics. But they're also the sectors that, if they start growing, they're going to create a lot of momentum and also create a lot of jobs. So it was very good to see that in the second quarter, there's been some positive action from mining and manufacturing specifically. So those three sectors, including agriculture, made the biggest contribution, which I do think is very encouraging at this point in time.
Yeah. Maarten, it's quite interesting that you bring in these three sectors: manufacturing, mining, and construction. And of course, we know the amount of fixed investment that is required for those industries to get going, and really also to create jobs and to boost the economy in a significant way. I did see, though, that gross fixed capital formation decreased by 1.4%. Talk to me just about that, what we're seeing, the softness that we keep on seeing in terms of fixed investment, and what needs to happen for us to actually get to a point where we are growing the economy significantly.
Yeah, I think that's probably the negative from the sprint. The fact that we saw another negative quarter, after the solar boom, positive quarters basically dried up, and I think we've now had 4 negative quarters in a row. So that still talks to the point that despite all the talk about policy reform, private participation, we don't really see those investments yet on the ground. And then if you see some recovery like we did now in mining and manufacturing, that puts a big question mark around the sustainability of that kind of recovery if we don't see that being matched by underlying investment as well. So I think the takeaway here is to get to that growth that will outstrip population growth over time. We can't stop talk about policy reform, all the initiatives that's currently in the pipeline to actually get investments onto the ground, because you're 100% right, that growth number, the gross fixed capital formation number, needs to start turning positive. And where it's currently about 13% of GDP, we need to get that to about 20%. So until we start to see that change, I think it's early days to talk about more sustainable growth.
Well, I mean, just as we look now ahead to the rest of the year, we've already gone through the first half, and now we need to be looking at the second half to see how that performs to form the GDP print for the year. What are your expectations there? And from the picture that we're seeing in the first half, what can we expect for the rest of the year, particularly also looking at the tariff story? And I do see also here that net exports are contributed negatively. Could we have some sort of impact on the overall picture for the year based on the tariff landscape?
Yeah, I think so. The tariffs, not only for SA, but for the rest of the world, is basically only starting to get implemented right now. If you just look at the strength in the US economy in the first part of this year, that clearly shows that the impact is not there yet. So I think we need to prepare for that tough environment going forward, at the same time addressing all our own local issues. But I do think, well, it's not magic, but our view is that we'll probably get about 1% growth for this year, which implies that for the remaining quarters of this year, there should be more positive growth, taking into account the headwinds that we are facing globally as well.
All right. Well, we do have to wrap up the conversation there, Maarten, but thank you so much for giving us insight on these GDP numbers that we saw for the second quarter. We may not be popping out a bottle of champagne, but at least it is a positive story. That was Maarten Ackerman, Chief Economist at Citadel.